Thailand plans to launch crypto payment sandbox for tourists. While this may sound like a localized effort to boost travel, our deep dive reveals this is a much larger story about financial innovation, geopolitical maneuvering, and the shifting dynamics of global capital. This isn't just about using Bitcoin to buy a pad Thai. It's about a nation-state leveraging digital assets. To compete for a new generation of wealth, and it carries profound implications for the global financial system, particularly for the US and its domestic markets. Let's break down this into three core components. First, what exactly is Thailand doing and why? Second, what are the broader global implications of this move? And third, how will this directly impact US stocks, the dollar, and our own regulatory landscape? The news coming out of Bangkok is more sophisticated than a simple crypto payments accepted here sign. The Thai government, in a move led by Deputy Prime Minister and Finance Minister Pichai Chunhavarjira, is launching TouristDigiPay, a nationwide regulatory sandbox. This is a direct response to a significant slump in tourism, with a notable 34% drop in Chinese visitors in the first half of the year alone. With tourism being a cornerstone of Thailand's economy, generating billions in revenue, this is an existential threat they are addressing with a forward-thinking solution. The program isn't a free-for-all. It's a highly controlled and regulated ecosystem. But here's how it works. Tourists will not be able to pay merchants directly with crypto. Instead, they must first convert their digital assets, be it Bitcoin, Ethereum, or stablecoins, into Thai baht. This is a crucial distinction. It maintains the Thai baht's status as the sole legal tender, protecting the nation's monetary sovereignty. The Bank of Thailand has developed a dedicated tourist wallet application. Tourists must open an account with a regulated digital asset business and an e-money provider. This wallet will facilitate QR code payments after the crypto to fiat conversion. This also benefits tourists from countries without existing cross-border QR payment agreements with Thailand, expanding their potential market. This is where the model gets interesting from a global perspective. The system is governed by a stringent Know Your Customer or KYC and Anti-Money Laundering AML framework. The government has put in place monthly spending caps, 500,000 baht for larger merchants and 50,000 baht for smaller ones, and prohibits transactions at high-risk businesses. There are also no cash withdrawals, only the option to redeem remaining funds upon departure. This meticulous approach is designed to prevent financial crime and address the very concerns that have made many Western governments, particularly the US, hesitant about widespread crypto adoption. Thailand is not just chasing a trend, they are meticulously building a competitive advantage. They've recognized that a significant and growing portion of the world's wealth is now held in digital assets. By providing a safe, regulated, and convenient on-ramp for this capital, they are positioning themselves as a premier destination for a new class of crypto-native tourists, a demographic that is often younger, wealthier, and more tech-savvy. This is a direct play to diversify their tourism base and capture new revenue streams. This Thai initiative is part of a larger global trend that is accelerating. We've seen similar, albeit smaller, moves in places like Bhutan and the UAE, where companies are accepting crypto for everything from travel bookings to space flights. What makes Thailand's move so significant is its scale, its national scope, and its comprehensive regulatory structure. It sets a new benchmark for how a nation-state can embrace crypto while mitigating the inherent risks. The implications for the global economy are far-reaching. Nations are now in an undeclared race to become the most crypto-friendly jurisdiction. This is a battle for capital, for talent, and for innovation. The US has long been the global leader in financial services, but its fragmented and often contentious regulatory approach to crypto, from the SEC to the CFTC, has created uncertainty. This has allowed other nations to experiment and potentially leapfrog the US in developing a truly integrated digital economy. As the number of crypto holders grows, currently estimated at over 560 million globally, Countries that make it easy for them to transact will inevitably attract more of their spending. This is not just a marginal gain. Crypto transactions in the travel and hospitality sector have already seen significant growth, with some companies reporting over a 40% boost in bookings after implementing crypto payment options. The average order value for crypto payments is also reportedly 30% higher than traditional payments. This suggests a powerful new consumer segment is emerging, and Thailand is making a clear bid to capture it. The Thai system's focus on converting digital assets to baht and its specific mention of stablecoins is a tacit acknowledgement of their utility as a less volatile medium of exchange. This is a massive endorsement of the stablecoin model on a national level. It also suggests that while the volatility of assets like Bitcoin is a known risk, the stable dollar-pegged nature of coins like USDT and USDC makes them an ideal bridge between the crypto world and traditional commerce. This adds another layer to the geopolitical implications. If other nations follow Thailand's lead, it could further entrench the dominance of the US dollar, as most major stablecoins are pegged to it. This is where the story hits home. What does a Thai crypto sandbox have to do with the S&P 500 or the Nasdaq? A lot more than you might think. The US has been stuck in a regulatory tug-of-war. The SEC, under its current leadership, has largely viewed cryptocurrencies as securities, leading to enforcement actions against many digital asset companies. This regulation by enforcement approach has created a brain drain, with many innovators and companies looking to more welcoming jurisdictions. Now, Thailand's successful and well-regulated sandbox will serve as a powerful case study, increasing the pressure on US policymakers to develop a clearer, more comprehensive framework. If the US fails to adapt, it risks ceding its leadership position in financial technology to countries that are more nimble and forward-thinking. This could have a long-term impact on the competitiveness of American tech and finance sectors. We have seen a growing correlation between the crypto market and traditional equity markets, particularly tech stocks. A 2023 IMF working paper even identified a crypto factor that explains 80% of the variation in crypto prices, and noted its increasing correlation with equity markets, especially with the entry of institutional investors. This means that a major policy change like Thailand's, which legitimizes and increases the utility of digital assets, can be a bullish signal for the entire crypto space. A rise in crypto prices driven by this kind of positive news cycle and increased adoption could have a knock-on effect on US tech stocks that have exposure to the crypto and blockchain sectors, such as companies that build mining hardware, payment infrastructure, or have digital asset holdings on their balance sheets. Thailand's move also intensifies the debate around a US central bank digital currency, CBDC. The US Federal Reserve has been cautious, citing concerns about privacy and financial stability. However, as nations like Thailand create their own digital corridors for commerce, the argument for a US digital dollar becomes stronger. A CBDC could offer a more efficient and secure way for the US to maintain its global financial dominance in an increasingly digital world. The pressure to develop a competitive digital currency will only grow as other nations innovate. The failure to do so could weaken the US dollar's long-term position as the world's reserve currency. Consider the US-based payment giants and travel companies. The Thai initiative, if successful, could force these companies to accelerate their own crypto integration plans. Companies like Visa and MasterCard, which have already been experimenting with crypto to fiat conversion services, may see this as a call to action to expand their offerings. Travel-related stocks could benefit from a more open ecosystem, as it would attract a new segment of high-spending travelers. Conversely, if they are slow to adapt, they risk losing market share to more innovative, crypto-native competitors. Thailand's TouristDigiPay sandbox is far more than a local tourism initiative. It is a strategic declaration that a nation-state can embrace the digital asset revolution on its own terms with regulation, security, and a focus on its national interests. This action sends a clear message to the world, and particularly to the United States. The future of finance is digital, and the race to define it is already underway. How the US responds, both in its regulatory policy and through the actions of its corporations, will determine whether it remains at the forefront of this new global economic order. Thank you for joining us today.